Today I want to talk to you about payouts. Yes, that's right, payouts. Take a look. It's barely been halfway through the first month of the new year, and we are looking forward to a payout coming up here shortly. We have exceeded the safety threshold reserve. We've already submitted a withdrawal request, filled out all the appropriate paperwork for this master account with Bullinox. Stay tuned to see all the tips and tricks I use to get to the payout. You'll be surprised. Disclaimer, this is for educational and entertainment purposes only. This is not financial advice. Consult a professional. Futures trading is risky. You could lose up to and including the entirety of your own capital. Hey traders, this is Mac Daddy Trader. Welcome back. First thing I want to show you guys is the equity curve, the P&L, the everything. This is a Bullinox master account after I passed the eval, and I traded it with not with gambling, not from over leveraging, just a slow grind, discipline, consistency, and smart risk management. All right, we're not looking for luck. We're not looking for one lucky trade. We're looking for a consistent flow upwards from bottom left to top right. So how did I do it? It's actually really simple, yet a lot of people make it really complex. And ego has a lot to do with it as well. So let's remove the ego when talking through this. The first thing I did was I picked a particular time of day to trade. Particular time of day. If you can see here, notice the middle finger right there. That is the middle finger of coming into the markets at a specific time every day. This was 8:30 Central, 9:30 Eastern, and that is where I accumulated a majority of my profits. Notice how when I traded during afternoon or evening sessions, I did not accumulate much. The second thing I want to talk about is how I approached trade management. So what I did was I focused on micros. That's right, micros. What I did with the micros is I was able to capture a significant portion of every move by using anywhere from 4 to 6 micros, depending upon the instrument used at the time, to capture most of that move. And you can see a lot of my moves have this curve that goes up each trading day, curve that goes up each trading day. And what you can glean from that is that I maybe took a 1-to-1 risk reward, maybe three contracts of 1-to-1, then maybe a 1.5 or a 2, and then maybe a 3. And that allowed me to capture more of the move and have an average higher reward to risk ratio over time. The third thing I want to talk about is loss management. So max drawdown, as you can see here, for one trade, the most I ever lost was 150 out of one contract, and the rest were in the 80s, and some were in the 110s, 105, 110s. So we're very well managed, and you know, we can go back to here and just see how price was captured and how the profits were captured throughout each day and how consistently and repeatable this process is. So once you have your 4 to 6 micros per entry, you're only trading up to 3 trades per day, and honestly 1 to 2 will get you there. 3 if you're trying to get tilted, you know, as long as your risk is good. I've had a tilting day. I can't remember if it was this one. I'm sure it was, but I tried to keep trading and it just got worse and worse. And by the time I think this day was a cumulative loss of over $300. If I had been trading minis, that would have blown my account. But since I was on micros, I could just come back the next day and the next day and the next day and grind my way back up. And so there was no issue there. I had really strong emotional control, and I was able to survive instead of thinking about profits. The fourth thing I want to talk about is using the same strategies day in and day out. Now, I have a couple of mean reversion trading strategies and a couple of trend trading strategies. It's nice to have a basket of things that work for you. The fifth thing I want to talk about is having a dynamic strategy set. So if we're having a ranging day, are you able to trade your strategy? Are we having a trending day? Are you still able to trade your strategy? So you may need a couple different strategies for each of those types of days. Are you having a strong volume day or a low volume day? That turns into the range or the break, right? So those things matter too. And for me, what I have over here is a 7-day ATR burn. It's a prototyped indicator that I'm making that I'll have available in my Discord. Link in the description below to join and get all these indicators for free, because I make them and then I put them there for the people that need them and want them. I have some session levels here that have extensions of untested highs, lows, and mids, and those are areas of very large institutional significance. I also have a 2 standard deviation VWAP that I use for confluence with the session levels. I have a MACD here, so that way I know which side of the histogram I'm on for any given trade, and the momentum at which we're moving based on the angle of attack of each of these MACDs. I also have a volume indicator that also shows the custom period moving average of the volume. So I primarily only like to trade when I have the most volume relative to the 20 period moving average. And it just shows me, hey, if I do want to take a trade in the afternoon, how's my volume looking? Is it something worthwhile, or is it just noise? And the last thing I want to talk about is not forcing your risk reward. If I have 4 to 6 micro contracts and I put them out at a staggered 1, 2, 3, and 4 reward to risk ratios, I may want to adjust those lines to be in front of the oncoming. I may want to adjust those lines to be in front of the session levels. And what I mean by that is, if price is coming down, I maybe want to take profit right at this line instead of going deep down into the VWAP, because I don't know if we're going to pull back or not. And if I do take one off there, maybe I leave one right at the VWAP line just to get the hit. And so that's what's nice about using multiple contracts for one entry and using micros to do that, because it's way less risk to your overall account size. Cumulatively, this is a great way to do it. And you also, if we look at the daily, it looks just about the same. And we can see the losses there, and we can also see how it looks. Take a summary snapshot for you here. We had some really great trading days. Overall, 85% wins, but it's a dynamic take profit, and 70 on the longs. And so average profitability, 78%, and with a 5.46 profit factor. Take that for what it is. It's just me trading my strategy that I've developed, and I'm executing only 1 to 3 trades per day, preferably 1 to 2. If you get a really nice runner, that's it for the day. I'm done. And just so you know, this took time. This took 12 days of consistent trading after passing an eval. Okay, 12 consistent days. This took emotional control. This took discipline, and there were no shortcuts. If this helped you, hit the subscribe button, comment if you want to see deeper breakdowns, and I'll keep sharing what actually works for you. Thanks for watching, and I'll see you next time.